of financial advice, right, kindly consult a financial advisor or contact your TR. So this is the content for today. I'll be sharing on CFD, which also means contract for differences, and the types of CFD instruments, how can you trade CFD, and also towards the end, there will be a technical analysis. So with that being said, let me start. So there are two types of market condition. So in the stock market, right, there's only going to be two types of movement. So the first one, right, being the upward movement, the second one being the downwards movement. If it's going up, right, we call it bullish. And if when you hear people say that if the market is very bullish, this means that the market is in an upwards trend. Okay. However, if when the market is going down, right, we call it bearish. So in a bullish situation, right, we want to long a particular thing. Okay, it means that we want to buy that thing that we are longing, lah. Okay, so in order for us to profit, right, it must go up. So let's use a stock for example. So in order to buy a stock, right, we must look at the ask price. So likewise, if you want to sell the stock or short the stock, for us to profit, right, the stock must go down. So if we were to looking at a short position, right, then we have to look at the bid price. So if you use our platform before, you probably recognize this thing, okay? You have seen the bid ask pricing, okay, shown in the bottom right on this slide, okay? To buy, we look at the ask price, which is the green box. To sell, we look at the bid price, which is the red box. Okay, so what is CFD? CFD, which also means contract for differences. CFD is a derivative product which also have the which also means having a value derived from another underlying assets. It is traded over the counter, traded via a broker-dealer network, which in this case it is traded under Phillip. So one advantage of CFD is that you'll be able to buy or sell, which means you can profit in both bullish and bearish situations. This is a type. This also depends on the type of strategy you want to use. Okay, when you long or hold one stock contract, right, you do not own the underlying assets, but what you're getting, right, is actually a contract. CFD is a contractual agreement between an investor and a CFD broker to exchange the difference in the value of a financial product between the time the contract is open and the time the contract is closed. So do note that different country equities, right, have different marketing hours. They also have different operating hours. So if you hold past the opening hours, right, then there will be a financing charge. So then again, what is the difference between stocks and CFD? So one key advantage CFD have against stocks is that we have this thing called leverage, which means we'll be able to use lesser margin to gain exposure, which I'll discuss more again later. Okay, CFD allows you to go long or short, which means you can profit in both bullish and bearish market. However, for stocks, right, for stocks, if you're using our platform, you will also be able to short and also leverage if you're using a margin account and have a SBL account. The interest is the same if you're using a margin account to trade. But unlike CFD, right, you only need one account and you'll be able to leverage, able to short, and also tap into other different asset classes, which is more convenient for you as a trader. Okay, and there's a financing charge applies like if you hold a CFD overnight. Do note that when we purchase a stock, right, we own the stock. However, for CFD, right, it's just a contract. You do not own the underlying stock. So this is just a brief advantage of CFD, which I'll explain a little more in depth later on. Okay, we'll be able to go long and short. When we think that the stock will go up, right, we can buy, and we think it's going down, right, we can short it. We are not restricted by any market directions and can profit in both rising and falling market. Okay, the next advantage is leverage. We can use lesser money to own more contracts. Unlike stocks, we got to pay the full price for the stock. And multiple asset classes like forex, indices, equities, commodities, and ultimately another advantage is hedging lah. is like an insurance, okay? In the event of news, bad news, whatever it is, right? Okay, anything that impact the stock negatively, your portfolio can be protected. So we can hedge our portfolio against news using CFD. So using an example of S&P 500 to explain how can we trade in two directions using CFD. Whenever we think that the market is going up, right, we can long at the bottom and take profit at the top. Or whenever we think that that is the highest. However, if we anticipate that the market is starting to fall, right, then immediately we can short the stock. And yeah, we are not restricted by any market directions, and we can profit in both rising and falling market. So next is leverage. By now, right, we should already know that CFD is traded on margin. So using the power of leveraging, right, we are able to take on larger positions using lesser initial deposits. With leverage, right, we can amplify our gains. However, leverage is a double-edged sword. We can also lose a lot more, right, if the market goes against you. So one reason why people use leverage is because we do not have large amount of money to diversify our portfolio, or rather to gain exposure. So we tap into CFD, right, to gain exposure. So let us compare in terms of money, right? What's the difference between a stock and a CFD with leverage? So let's just say that we want to long 100 company ABC, right, at $100 for $100. And for this counter, right, the initial margin required, right, is 10%. So for stocks, in order for us to hold 100 at $100, right, we will need $10,000. However, using leverage with CFD, right, we only need $1,000. So using $1,000, right, we'll be able to gain exposure of a contract of a value of $10,000. So how can we amplify our gain or loss? So for gains, right, if the stock goes up to $150, we will be profiting $50 per share. So for stocks, we will be up by $5,000, and that will be a 50% gain. However, for CFD, right, we will also be profiting the same thing, $5,000, but then, right, we are actually up by 500%. So using 1K to profit 5K, wouldn't it be great to be gaining 500%? So let us now hear about the bearish side. So when the market goes against you, so company ABC went down by $10, and we'll be losing $10 per share. So for stocks, we'll be down by $1,000, and that is 10%. So however, for CFD, right, will be down by $1,000, and that is 100%. So this is why leverage is a double-edged sword. They can amplify your gains and losses. So using our platform as so if you use our platform before, you probably recognize this. If you have not, then I show you based on our platform. Okay, so using Apple as an example, right? Let's say we want to long 100 Apple at 220. So when you launch an order ticket, right, you'll be able to see the gross contract value, margin requirement, and long short financing charges. So over here, right, we can see that the margin required is 10%, which also means that in order for us to hold 100 Apple contracts, right, we need around 2.9k Sing dollars of margin to purchase the contract that worth around $22,000. So from this ticket, right, you'll be able to see the long short financing charge. Do note that different counters have different margin requirement and financing charges. Do make sure that you check all these first before you place an order. So like what I said, we have different types of CFD instruments. Okay, so for CFD instruments, right, we have equities where we offer CFD and DMA. We have commodities, which are mainly in oil, gold, silver. And for indices, we have the big indices like S&P 500, US Tech, Wall Street Index, and many, many more. And there are also even mini contracts, which I'll share a bit more later on. And we have Forex. So for our equity CFD, right, whatever you see on the screen right now, right, we have access to the 8 different global stock exchange, and whatever you see on the screen is what we offer. So these are the countries counter that we offer. Okay, do note that each country have its own operating hours. When the operating hours is over, you will not be able to buy or sell. Okay, you can find out more in our website. So if you have used our platform before, when you search on a counter like, for example, DBS, Singtel, SIA, you've probably seen this. So the blue one, right, is actually the EQ. There's an EQ on it, the blue one, which is equities, which is your stocks. And the green one, right, named CFD, and that is CFD, which is the derivative of the stock. So the darker green logo, right, named CFD DMA. So these are the DMA. Okay, do note that DMA is only for Singapore counters. So for equity CFD, right, these are all cash settlement and it mirrors the price movement of the stock. So from this picture, right, from this photo, right, you can see that there's no additional spread. You can see the bid ask for the stock, CFD, DMA all have similar pricing. Okay, there is no additional spread. And all these three, right, yeah, like what I said earlier on, okay, CFD is a derivative product of. So when you search a SGX counter, right, you may see a CFD DMA. DMA means direct market access, which is only applicable for SGX counters. The stock is filled on the extra exchange and will participate in the exchange order book, which works very similar to stocks. Okay, we'll send the order to the exchange and then the exchange will execute that. Do note that these will be done based on the last done price, not the bid ask price. So at this point, we'll be thinking that maybe DMA is better because it provides the transparency and we'll be able to monitor it via the exchange. Yes, it is better, but then right, for the transparency, right, we actually have to pay a higher commission rate. Yeah, so do note that if you are trading CFD DMA, right, in order to locate them, you need to click on the CFD DMA, like the photo shown in the bottom. So this is the summarized version of a CFD DMA of how the mechanism works. Okay, DMA gives you full transparency. It trades on market liquidity and order book of the exchange. So maybe you can read on the slides. Okay, you can also find out more on our website. Okay, so how do we calculate the profit? So assuming, right, we long 10K of stock A at $2. Since we are in a long position, right, in order for the in order for us to profit, right, company the stock A, right, have to go up then for us to profit. Okay, so if it goes up to like maybe $3, so by then, right, we'll be profiting $10,000. If the stock goes down to $1, then we will lose $10,000. Basically, the price difference between the price entered and exited multiplied by the quantity. So likewise, if you are in a short position, in order for us to profit, the stock must go down. So using the same example, when it goes down to $1, we will profit $10,000. If it goes up to $3, we will lose $10,000. Literally the opposite from a long position. So what is commodities? So do you know that commodities, right, are actually part of our everyday life? So they are actually like the raw materials, right, we use in our daily life. So to help you better understand the meaning of commodities, right, let us look into the girl in the picture. Okay, so what is she wearing right now? So her clothes, right, is probably made out of cotton, okay, which is a commodities. And where she get them, right, is from online shopping, like maybe Taobao, Shopee, which also requires oil, which is also another commodities. Okay, so what is she holding? She's holding a cup of coffee, which is also another commodities. So girl being girl, she like to dress up. Maybe she like to buy gold, buy silver, which is also a commodities. when she goes shopping, she'll either drive or take public transport, right? So all these transportation, right, majority of them also operated by oil, which is also a commodities. So in short, right, commodities are categorized in three different sectors: metal, energy, and agriculture. Metal are like our metal are like our gold and silver. Energy are like our oil and gas. Agriculture are like crops, live livestock that have been raised and harvested to provide food. So if you use our platform before, we do allow you to trade on commodities, and these are the frequently traded commodities lah: gold, silver, and oil. There is no expiry and the margin is as low as 20%. We do provide the mini contracts. So what is mini contracts? Okay, so if you remember earlier on, right, where I shared how you'll be able to see the margin required based on the orange circle. Okay, so if you use that method, right, we'll be able to find out the difference between the USD1 and the USD100. What's the difference between these two contracts? So for USD1, right, the value per point is $1. So if let's say you're in a long position, the USD1 goes up by $10, you'll be profiting $10. So unlike the USD 100, right, the value per point, right, is $100. So if it goes to $10, right, you'll be profiting $1,000. So assuming, right, we want to long go at 2.5K. So we can see that the contract value, right, between the both, right, is different. One is 2.5K and 100, right, is 250K. So if we were to do some math, right, we divide the gold USD 100 by 100, right, we will actually get the gold USD one. So the good thing about USD one is that it requires lesser margin for traders who wish to gain exposure but have lesser capital. So this is why they use the smaller contracts, the mini contracts. So then again, this is mini contracts. Okay, so moving on, what is index? This is a method used, right, to track the performance of a group assets, or rather a method to measure the performance of a basket of securities. So for this example, I would like to use Straits Time Index, which in short is STI lah, as an example. Okay, STI is a market capitalization weighted index that tracks the performance of the top 30 companies listed on SGX. So there are currently 600 over listed companies in SGX, but STI, right, only tracks the top 30 companies. So all these 30 companies, right, roll up into one easy to read average price. So if you hear people saying that, hey, the market is up today, highly likely, right, they're referring to STI is up. Not because STI is the market, but the index, right, is a representative chunk of the market. Because they have the largest and most influential company, or rather the big cap companies in Singapore. So the big cap companies are likely to be more stable and more established in Singapore. So as long as you have come Singapore before, or stay in Singapore long enough, right, you probably have heard of all these 30 companies inside STI. So if I were to name a few companies, right, they are like the DBS, OCBC, UOB, our three big local banks. And let's say you see that STI is doing well, right, then highly likely you also know that Singapore economy is also doing not bad. Do note that, right, if you see the bigger caps company not doing so well, right, then the chances of the smaller caps company, right, to outperform is also slimmer because they are more volatile. Okay, so in our platform, right, these are the indices we offer. However, those indices that whatever we see on the screen, right, are the commonly traded one. Okay, you can view them more on our website. Okay, we also have the mini contracts for them. So just like the gold example, right, this is S&P SP 500 contracts. Okay, so we have the USD 1 and USD 5. So the 1 is value per point. Value per index point, right, is $1, and the 5 is value per index point is $5. Okay, so do note that do note that for our contracts, right, It tracks the performance of the cash index and it is dividend adjustment. Okay. Also, the price may differ from the cash index, and different indices have different leverage. We offer up to 20 times leverage. Okay, when we buy, so for Forex, right, when we buy or sell trade, right, we are referring to the base currency. So an opposite transaction takes place in the term currency. So for example, this pair, pound dollar. Okay, pound is the base currency and USD, right, is the term currency. So for example, if we were buying the pound dollar, right, essentially we are buying the pound, selling the dollar. We want pound to strengthen and dollar to weaken. So to understand the codes better, okay, assuming pound dollar is 1.2, okay, this means that 1 pound, right, can be exchanged for 1.2 USD. Okay, so if pound is 1.3, right, means 1 pound can be exchanged for 1.35 USD, 1.3 USD. So based on this quotation, right, your profit and loss will be reflected in the term currency. Okay, hold on. Okay, so when you hold a FX position overnight, right, overnight 5 a.m. for daylight saving and 6 a.m. for non-daylight saving, the position will gain or loses swap points. So the gains or loss, right, is due to interest rate differential between the currency bought and sold. Interest is earned on the currency bought, while interest is paid on the currency sold. So the swap points gain or loss, right, will be credited and debited from your CFD account as a swap point adjustment. So based on our platform, right, we'll be able to access to more than 30 major global Forex pair, okay, and it tracks the performance of the underlying spot Forex. So the margin is as low as 5%, which is the 20 times leverage, and the minimum contract size, right, is 10,000 of the base currency. So next is commission. Commission is only applicable, right, during the opening and closing of a CFD position. When we open a position, right, we are charged commission, and when we close the position, right, we are also charged the commission. Commission for equity CFD, right, are charged based on the total contract value of a CFD. Okay, do note that different country counters, right, have different commission fees. Do check our website to know more about the particular counter commission. Equity CFD trades done on the same day for the same counter, right, will be charged based on an algorithmic basis, which means that the collective commission is charged against the total value of the day transaction instead of separate commissions for each transaction carried out. So for commodities and in indices CFD, right, they are charged on per site, per contract basis, and commission is not applicable for FX CFD. For more information, you can view our website lah, to find out more. So now let's dive deeper into the financing charges. Okay, when you hold a CFD position overnight, right, you will be subjected to overnight financing charges. So this is accrued on a daily basis, which will only be realized upon contract rollover or liquidation of a CFD position. So one common question, right, is if I close and open a CFD position, right, within the same trade day, do I have to pay the financing fee? So remember I said, right, that if we hold past overnight, right, we'll be subjected to financing fee. So overnight doesn't mean 12 a.m., but it means, right, after the market closes. So if we open within the same trade day, right, we open and close within the same trade day, right, then there will be there will not be any financing charge lah. It will only be charged, right, if you hold past after the market close. So for example, the US market. So let's say, right, we open a position today later at 10 p.m. Okay, and then at 1 a.m., right, we decide to close it. So there will be no financing charge for this situation. So here's how to calculate. So how to calculate the financing charge. So this is the formula. Okay, your market value multiplied by the rate divided by 365. The orange box, right, is where you can find your market value. And do note that we only use the closing price of the market value for our market value lah. And the green box is where you can find the financing charges. So finance charge is charged based on a daily basis of the closing price. So here's an example. Assuming we long one CFD, okay, and we close it on the third day. Okay, so day one, right? The day one, right? Our position closed at $1,000. Day two closed at 1.2, and day three we liquidate it. So you do not need to add the financing charge for day three as you did not hold pass overnight. And this is the calculation based on your total financing cost. So how can we use CFD? Actually, there are many ways to trade CFD depending on your type of strategy, your goal, and what you want to achieve at the end of the day. Some people, right, they buy, sell, and hold. Some people use the scalping strategy. Some use self-developed trading strategy, which I'll share more later on. Okay, so the first strategy, right, is pretty easy lah, where you just buy or sell and hold. So the reason being, right, is because, right, it's cost lesser than the capital outlay if you were to do that in stocks, and we'll be able to attain a higher exposure, or rather a more diversified portfolio. And if we plan to get dividend or capital appreciation, right, then we can just buy, hold. So for us to buy and hold, right, is because we believe that the the counter will do well. So for us to sell and hold, right, is because we believe that the counter will underperform. Okay, so the next method, right, is scalping, which is mainly for day trading. Okay, where they will monitor the chart, and when there's any given opportunity, right, they will close the position and earn off small price changes. So let me give you an example. Okay, let's say we enter a stock at 41.5. So 5 minutes later, right, the stock becomes 41.55. So these scalpers, right, will take the profit and earn that 0.05 per share. And they'll do it over and over again. And then they over time they'll stack up a not bad amount of profits lah. So in order for you to scalp, right, you actually must be good at your technical analysis. Also, some CFD traders, right, have developed their own unique strategy, and it is based on your type of strategy. So it can be a mixture of indicators. So they will monitor the stock closely, and then they'll look for indicators like the candlestick. Like candlestick, for example, does this pattern shows a head and shoulder, cup and handles. So there are different type of candlesticks. So if it's like a doji candlestick, so they will identify lor, then they will see whether this is a good time to buy, a good time to sell, or that kind of different indicators lah, based on the type of indicators shown lah. Okay, so some people use moving average, and also some people use support and resistance to help them make decision when it comes to trading. So if you were to Google some technical analysis, right, then you can see that some charts are very complicated and they have a lot of different indicators. So personally, I use a mixture of a few indicators, not just the candlesticks, but also moving averages and also support and resistance before I decide if I should proceed with the trade lah. Then again, all these indicators, right, are based on your strategy and your liking and your comfortability of using the indicators, and ultimately hedging. So at the end of the day, you must see what is the most suitable method for yourself. So like what I said earlier on, hedging is also a CFD strategy. Okay, some people use hedging as a strategy in CFD, where hedging allows you to hedge against the negative events, for example, earnings report. So if you have seen yesterday, I think after market hours, Nvidia had their earnings report, and their earnings report was quite big. It wasn't as good as what people expect. So people are actually dumping the stock. So kind of now, right, the pre-market Nvidia is trading, I think, a 4% loss, if I'm not wrong. Based on the last I see, about 4%. It's down about 4%. So, okay, so back to it. So if you're actively trading, right, you will know that the earning report day, right, there will be an increase in volume of the stocks. So usually, right, when the earning is really good, right, the stock will go up. Like Nvidia, past earning, it flew quite high. Okay. However, if the earning is bad, right, investors will start losing trust in the company and start dumping it. And there's also news like, for example, COVID. If you remember, sometime in March 2020, right, there was a huge drop in prices, or even news like war. Okay, so all these news, right, will create fear in the market. Okay, so hedging is like an insurance. So it protects you against the unforeseen circumstances. So if the market goes against you, right, you don't need to worry because you already hedged out your position. And sometimes you may even be able to profit out of it. So hedging can be done by establishing opposite positions. So there's two types of instruments to use. So the first one is equities or world indices. So if we were to hedge fully, right, then we will establish an opposite position for the same counter, same quantity. So let's say we want to hedge partially, right? Then we can establish opposite position in co-related instruments like STI. So this is based on a um fully hedged example lah. Assuming, right, we already have 1,000 long at $23 in your stock account, and for whatever reason you do not wish to close the position, and we do know that something bad is happening, and we decide to hedge fully. So for example, like the earning report, and we predict that this counter will perform badly lah. So we went to hedge fully by establishing opposite positions for the same counter and quantity. Then when the earnings report is out, we know that we are good because we don't need to worry. Be it the upside or downside, right? We do not lose a significant amount. Okay, or rather we will not be losing lah. Okay. So for example, right, when the stock goes to $21, right, then our stocks account will be negative $2,000, but our CFD hedge, right, will be positive $2,000. So if you were to net it off, right, actually you're okay mah, because zero profit, zero loss. So maybe at $21, right, you can use the profit from your CFD account, right, to buy more stocks. So you bring down the average price. Okay. So right now I'll be sharing more on what I feel on the overall market right now lah. Okay. So okay. So if you know that, I think 2 weeks back there was a drop in the market, or rather there was some correction happening in the market due to the liquidation lah. Okay. So we can see that today the market is still very bullish. Be it there was this drop in 2 weeks ago or what. It just feel like the 2 weeks didn't even happen. The market recovered very quickly. And yeah, now S&P 500, right, is actually near their all-time high already. And for this year itself, right, it's up by 17%. So if you ask me, right, I feel that we should buy on every dip, and maybe we can dollar cost average it if you're thinking for a long-term perspective lah. So for those of you that already bought it, right, and or rather holding some position, good for you. For those who have yet to buy, right, maybe you can look to buy, right, during a major correction, or rather some retracement. So personally, right, I'm holding some, and I will look to buy more at the 5K level. Okay, definitely I'll buy more if it goes down to maybe $4,000, 4,000 or maybe 3,000. Definitely I'll buy more lah. So for my personal account, I missed the retracement 2 weeks ago. Okay, kind of regret it, but I mean, this like no choice lah. So this is my technical analysis for Apple. Okay, so you can take a screenshot and then refer to it. Okay, So Apple have demonstrated a clear uptrend. However, right, the price seemed to be slowing down as it approached the immediate supply, and their all-time high is 237. So in order for them to exceed their all-time high again, right, the price has to sustain above the 223.5 level and have to break through the 240, and the price over time, right, the price will go to 260. So you can take note on all these levels lah. So these are some levels for you to refer to lah when you're actively trading. Okay, so this is my technical analysis for Amazon. So past few weeks, right, Amazon have been dropping upon reaching their previous demand, which then turned into a supply at the level of 180. What I believe, right, is as long as the price can hold above 167, right, we should continue to see a range bound in Amazon. Okay, and these are the levels, right, that you should take note lah. So these are my overall thoughts. With the current market situation, right, these are the few things that I can advise you or rather recommend you to do. So the first thing first is do not time the market, but it's about time in the market. I know a lot of I know that a lot of us, right, try to time the market, try to get in the best price we could. Then again, if we really can get in the best time, right, the best time is actually 20, 30 years ago, where everything was near the low and today they are so high. Okay. So I mean we cannot predict the future lah. So just don't time the market or just be in the market, participate in the market. Okay. So we can always buy. Then when it goes down, right, then we buy even more. So when it goes up, right, we can take a little profit. So over time we will I would say that using this strategy, right, like the dollar cost average strategy, right, is not bad. Okay, but then you must be able to keep buying during the dip lah. Okay, but then again, this is a topic for another day. You can read up on the strategy if you are free. Okay, the strategy is dollar cost average. This strategy allows you to stay invested in the market and do not miss out on opportunity. Okay, so the next one, what you can do is you can also take on CFD positions, right, to hedge out your risk. And please remember that it's always good to take some profit lah. A small profit or big profit, right? A profit is also a profit. Okay, so if necessary, right, you may consider cutting loss too lah and wait for a better opportunity. Okay, so for our existing customer, right, you may create an account uh clicking on account management, CFD, online account opening. So for new customer, you can create an account via bonus.com.sg and follow the steps. Or alternatively, you can walk into TR, you can call your TR, or you can walk into the Phillip Investor Centers. Okay, or you can scan the QR code. Yeah, so these are the location that we have. We have quite a few outlets. Okay, you can find them in our website. So for internal transfer, you can click on account management stocks, online form, withdraw form to transfer from, then enter the amount, then yeah. Otherwise, you can do a pay now transfer. You can watch the tutorial. So for direct funding into CFD accounts, right, kindly add CFD at the back. Okay, so for those of you who do not know, we are having an ongoing promotion, and you can scan the QR code to find out more. We are currently giving Palantir, TSM, and Microsoft. So these are the tiering list lah. So how can you achieve Palantir, TSM, or rather Microsoft? So if you open an account with us and opt in for CFD, you'll get a Palantir CFD. So if you trade a required amount before 31st August, yeah, you can get a TSM Microsoft. So to achieve this, the trade volume, right, via equity CFD, indices CFD, commodities, and forex, right, you can actually achieve the total contract value. Yeah, so you can create a CFD account and then you can use the CFD instruments, right, to achieve the contract value lah. So it's Q&A time. Do anyone have any questions to ask? So give me some time. I'll read the question. I'll read the questions, and in the meantime, right, you can scan the QR code to find out more on the ongoing promotion on the left. Okay, or you wish to create an account, you can scan the bottom right. Okay, so someone asked, I can't find the counter on CFD. However, I'm able to find it on stocks. Okay, so for this situation, right, maybe you can share with us what counter you wish to trade or what counter you are looking at. Okay, then we'll do our necessary risk assessment on our end lah. Then we'll try our best to cater to you. So feel free to contact us like if you ever face a situation like this where you are unable to find a counter for CFD trading. Then we'll try our best to cater for you. Okay, if there is no more questions, then I think this should be the end of the webinar. Okay, so for those questions that you wish to ask, you can either contact our TR or you can call in our hotline. And or alternatively, you can even read it on our website lah. So for more information, you can view our website on Phillip CFD and read the info sheet, right, to find out more details about it. Or you can always call in our dealing desk lah. Then we can assist you on that. Okay, with that being said, thank you, and I'll see you all for the next webinar.